Ajay Sharma is in conversation right now with Samir Baisiwala, India Pharma and Property Analyst at Morgan Stanley. Over to you, Ajay.
Thanks very much for that, Avan. That's correct. We've been interacting with all these guests on our show last 1.5 session. And right now, Samir Baisiwala is here with me from the 20th Morgan Stanley Summit. And we've been interacting with a lot of funds also around. So let's take the discussion forward. Samir, let's start with the more interesting space which on the market's mind right now, which is pharma. We are gathering that relatively much more appetite coming back, and the news flow, which was extremely negative 1 year back, has started to turn for the better. First, I would like to understand from you, because you interact with all these companies which had regulatory issues, on the way they put remediation in place and the kind of recovery some of the stocks have also seen.
Yeah, thanks for having me here, Ajay. Always a pleasure. Pharma sector, I would say fundamentals are incrementally getting better on various fronts. So if you talk about regulatory side, these issues are, I would say, 3 to 4 years old, and that's precisely the time when they start to remediate and come out of these. So we are hitting the tipping point somewhere in the quarters ahead. Second, I would say in the US, a lot of pain was because of consolidation, which is customer consolidation, and a fair bit of this is done. So we are reverting back. Don't get me wrong, prices will continue to go down, but from mid-teens to probably late single digits. So incrementally things are getting better. In the domestic market, I would say that the supply chain issues, linked to GST, all those things are behind us. Things have settled down. So we are again looking at a good market revival. So versus yesterday, today is better.
Even the new US FDA chief, Mr. Gottlieb, has been extremely communicating very well on social media, Twitter, etc. They have the time taken for approvals have also seemed to be going down. How are you looking at the regulatory regime from here on under the new US FDA chief for large generic players, large Indian players which cater to US, and also the pricing environment there in US from here on?
Yeah, I think it's a great question, and I would say it's a double-edged sword. What it does is FDA's intent is very genuine in getting the products quicker to the market and making drugs more affordable. But where it helps the big Indian company or any Indian company which is working on good technologies and complex products, is that they will get to the market quicker, and they'll be able to monetize that, and it would be a low competition market because it's a high technology product. Versus that simpler Me Too products, there'll be more and more approvals, and there will be more pricing headwinds on those. So you will probably not make too much money on that. So it helps US customers on both sides, but companies on one side and not on the other side.
Some of the areas, the new areas which are opening up and perhaps are not there in the valuations, one of the companies got biosimilar progress on that. Lupin is also talking about it last 1 year now. Do you think these are new opportunities which are opening up new angles to the same companies in a way, and hence not fully in the price right now?
I think it's a great point in a sense that next decade will belong to biosimilars in the generic world, and we can expect about $100 billion plus worth of branded drugs which are going to lose patent protection, and there would be biosimilars moving in. So that opportunity is right there in front of us. And second, I think the beneficiaries would be very specialized companies who have worked for the last 10 years on that, put serious capital to work, have overcome product development, clinical and regulatory hurdles to now be ready to get into the market. It's a great fertile place to be in, and my guess is rather than hybrid players making big dent, it would be more specialized players which should do well.
One question from the mid-cap pharma space. A lot of mid-cap companies are there, around $1 billion market cap, billion to 2 billion. Many of them have large portion of their revenues from the domestic market, and that is also emerging as a key area. What are your observations here? Which are the kind of companies, if not stocks, which are likely to be better placed?
Well, I think there is a good reason to be very constructive about our home market, and I would say emerging market as such, which are all branded in nature. What goes in their favor is a great degree of under-penetration. As affordability, insurance cover rises, I think this sector can see growth for next 10, 20, 30 years, and that makes terminal value really valuable. So I think it's a good play, it's a great play, but I would again emphasize that the comprehensive business models looking at various markets are probably more complete models. You will have difficult years in one geography when the others come to help you out. That point doesn't go away.
Let's shift focus and talk about the property sector, because that is also something which you look at. Talk to us about which companies attended the conference from the property side, especially the ones where funds' eagerness to meet the management, know the outlook were higher. Share with us something on that.
Yeah, sure. So, what is pretty unique about India's property sector on the capital market is the fact that it's a very nascent industry. This sector took birth just about 10 years back on the capital markets, and it's still very, very small. I don't think in most of the major markets that real estate accounts for less than, I would say, 2 or 3% of the overall market capitalization. It's such a comprehensive sector, so to say, which is the case here in India. So my point here is that investors for last 10 years actually have been looking at investable ideas, big companies, put serious money at work, which has been missing so far. But the good news here is that over last 12 months and going forward 12 months, you would have seen a lot of foreign investments and domestic investments flowing into the companies at platform level, at entity level. So we see this sector get big and bigger in the years ahead.
This is also a sector where we have a very good mix of regional players which are doing well. There are pan-India players. There are large players which are almost seen as branded real estate companies. Where do you see a margin of safety and valuations more comfortable, and where do you see the institutional money flowing?
Well, you're right. There are different pockets, and different cities are not doing equally well. Excuse me. So it's very different strokes. But I would still go back and make a point that India has a huge pent-up demand for real estate. If you are a high quality player, if you are a trusted name, it need not be luxury, it can be affordable as well. So a right product at the right location at the right price will sell, and will sell very well. And there are enough and more companies which have shown this even during the testing times of last 2 years. So I think that trend will continue, but South India is doing better than the North India.
Last question, as far as the big development in the sector shook up the entire property sector was RERA. What trends are you observing? What kind of players are behaving which way post RERA? And also tell us what's the outlook on volumes front. There is a lot of inventory still in the system, at least in NCR.
Yeah, I would say RERA is a very major milestone in the evolution of the sector, and this is something that people will feel and will believe in the years ahead. It has sophisticated the practices in the sector. It has brought the bargaining power of the customers at par, or has balanced it out with the developers. It has put in a lot of financial discipline because 70% has to remain with the project, with the developers. So I think it's a very good piece of law, and that should help the sector evolve better. On volumes in the market, I think it's still we're talking about on an aggregate in India about 10 quarters of inventory, where it takes about 20 quarters to start to deliver the project. So I don't think it's really any scary level or anything. I think it's pretty okay level, but yeah, the demand should continue to really absorb this inventory.
All right, Samir, I'll let you go on that one. Thank you very much for your time. Have a great conference ahead.